Good evening, I'm Leon Jurari. Welcome to Business PNG, your weekly look at business news and updates. The country faces its own significant challenges as the economy is expected to grow between 20 and 22% in 2015, probably the fastest growth any emerging economy has recorded over the past 30 to 40 years. Business PNG spoke to ANZ Asia Pacific's chief economist, Glenn Maguire. The Papua New Guinea economy is facing significant challenges as growth reaches 20 to 22% next year. An increase in interest rates in the United States and a slowdown in China's growth are the two key risks for the global economy in Papua New Guinea. The US, after having had extraordinarily low interest rates for 4 or 5 years now, as a result, companies not just in the US but across the world have become used to the low rates. According to ANZ's chief economist Glenn Maguire, the global interest rate structure will continue rising for several years. So Papua New Guinea will be looking at a 5 to 10 year drift higher in the global cost of capital. At the same time, China is attempting to deal with its debt levels while it maintains growth. The risk comes if and when China slows further. Maguire also warned that Papua New Guinea faces its own significant challenges as its economy is expected to grow between 20 and 22% next year, probably being the fastest growth any emerging economy has recorded over the past 30 to 40 years. He said it certainly is going to be an outstanding achievement, and a growth rate like that will certainly be attracting the attention of offshore investors and those wanting to do business in Papua New Guinea. He added the workforce has become highly skilled in the mining and energy extraction sector, and those workers will probably need to be reskilled or growth needs to be transitioned to other sectors of the economy.
In the studio, Glenn Maguire, Chief Economist, Asia Pacific, based with Global Markets in Melbourne. Glenn, welcome to studio, welcome to PNG.
It's a pleasure to be here.
Thank you for your involvement with PNG Advantage 2004. What was your remit to speak to the delegates at the conference?
Basically, I was here to talk about the outlook for the global economy and how that was going to impact on Papua New Guinea. And there's a number of key trends that we see emerging that I think are going to be important for the PNG outlook for the next 2 to 3 years. The first is China is slowing, but as well as slowing, it's also trying to rotate its growth model towards being more consumption focused. The second is the US economy is recovering, and in line with that recovery, the US will be raising interest rates and the global cost of capital will be rising. And we think the bottom line from both of those objectives is that growth is likely to rotate more to the south of Asia, the ASEAN economies like Indonesia, the Philippines and Malaysia. And one of the dynamics you're likely to see is as they grow, they're going to demand more food and more soft commodities. So for PNG, we think perhaps there's a rotation occurring away from energy commodities towards soft agricultural commodities.
The Chinese are not going to stop buying our gas.
Absolutely not. And even if the Chinese economy slows to 7%, the change in the Chinese economy each year will be $1 trillion.
I'm smiling when you say the economy slows to 7%. But so, I mean, clearly they're not going to stop. There may be some price impacts on the gas, but does that mean if this rotation to the south of Asia, that in terms of finding money for Papua New Guinea, is going to be difficult? More difficult?
I don't think so. And it's important to remember that one of the features of Southeast Asia is production platforms and manufacturing has always been in the north: Japan, China, South Korea, Taiwan. As you move production platforms south to the cheaper, lower labor cost economies of Indonesia, Vietnam, the Philippines, they don't have the electricity infrastructure to keep up with that, and we expect to see an expansion of LNG-fired electricity across Southeast Asia. So new opportunities for PNG in the neighbourhood.
And I notice we're not in that low-cost manufacturing base at all.
Not yet, not yet. And I think it's definitely something that many markets will be looking at. If we look at the example of Thailand, it's already starting to shift some of its lower cost production into the Mekong economies of Cambodia, Laos, Myanmar, where wages and skills levels would be equivalent to that of PNG. So I think there is an opportunity for PNG to start attracting this investment.
Are those wage levels equivalent? I mean, I would imagine ours are higher. I mean, 3.20 an hour. I mean,
I think once you get into the lower levels of Cambodia and Laos, you do start to see competition. But one of the key sort of elements in choosing where to locate production platforms is access to electricity, access to supply, access to raw commodities, and that does make PNG look advantageous, I think.
So more opportunities to sell our gas, clearly, and by some of the presentations we have plenty of it. What other opportunities do you think this rotation, you guys obviously study these things full time. What other opportunities do you see for an economy like Papua New Guinea is growing?
I think the agricultural opportunity is underestimated as well. And this is one of the key dynamics, how quickly the Asian consumer is starting to emerge. And we think discretionary consumption starts to occur around Asia at spending levels of around $4 a day. And across Southeast Asia, you have around 90 million new consumers entering that level of spending each day. So I think in terms of agricultural commodities, in terms of coffee, in terms of palm oil, in terms of a whole range of agricultural commodities, there's also enormous opportunities there as well.
Is there a burgeoning consumer class developing in Papua New Guinea itself? Do you see that?
At this stage, it's occurring more slowly. And one of the reasons for that is there's not the same degree of skills transfer. There has been a significant improvement in skills in some workers who have been part of the LNG build-out, but it's creating the opportunities. And I think we may need to see the more visible hand of government in creating projects so that you can see these transfers of skilled workers from LNG to building and construction to infrastructure, to perhaps improving the connectivity of the PNG economy.
But looking to that medium to long term, I mean, we're not quite ready to take the advantage of 600 million extra Chinese who want a bit more beef and a bit more chocolate.
Oh, at this stage, no. At this stage, no. But I think it's going to be a natural progression to that. One of the constraints you may find in an economy like Australia is a lot of grazing land has now been given over to coal. So eventually, as more Chinese, as more Indians, as more Indonesians demand protein in their diet, there is going to be increased demand for high quality agricultural output.
Are the same issues in China developing in India? I know in Papua New Guinea we just seem to forget about this other huge behemoth in the region as well. I mean, is it the same issues developing there?
At a lower level or at a slower level as well. I mean, things move very, very slowly in India. We do have a new Prime Minister, Mr. Modi, who is starting to change behaviours and increase the speed at which the bureaucracy works. But I mean, just to provide you an example, we recently did some forecasts where we estimated India would overtake China in terms of population around 2035, but it wouldn't overtake China to become the world's largest economy until 2075. So that would be some very, very long-term planning if you were focusing on that.
So if you were in Papua New Guinea, you're looking at China.
Yeah, that would be the safe bet.
So when these guys have a plan, it's a 5-year plan, a 10-year plan now.
After the break, some good news as we discover the next wave of opportunities for Papua New Guinea. Don't go anywhere.
Obviously with the build of LNG finished, and I think as many people anticipate future projects, and we had Peter Botten talking about 3 new trains, but so those businesses are going to have to go out and find $25 to $28 billion to build those. PNG's got a huge infrastructure buy, and I mean your own ANZ imagining the future, the Asian future, has figures of 112 to 170 billion US by 2030. We're sensing the economy is pretty slow at the moment. Where does PNG get that sort of money? It's not going to come from gas.
No, it's not, and it's not going to. It's not going to come domestically either. No. There's not the enormous pool of of domestic savings an economy like China has that can be tapped into.
So that sort of money is available in China?
Yeah, definitely. I mean, corporate savings are very high, domestic savings are very high. The government has several $1 trillion worth of foreign exchange reserves. So, I mean, in terms of a lack of dollar liquidity in Papua New Guinea and the options around that, you know, there's two ways to go. One would be what's called concessional borrowing. So long-term borrowing from export-import banks. It's interesting that China is now looking to develop its own infrastructure lending bank that will lend to the Southeast Asian nations who have an infrastructure deficit. It will be interesting to see how Papua New Guinea positions itself in terms of that relationship. Will it be able to borrow from such a facility?
Is that on top of, I mean, the new BRIC bank that's there? I mean, is this on top of that?
It's additional to it. I mean, China is really trying to improve and increase its multilateral leverage and influence across the world. It's very unhappy with the World Bank. It's very unhappy with the IMF. It sees itself as being a more judicious lender that supports many economies in their development profiles. The conditionality on a lot of Chinese lending has been quite strict, and I think that's something that needs to be watched. But you know, the other option is no economy has gone from being low income to middle income to high income without tapping financial markets and harnessing the power of finance for growth. And ultimately, Papua New Guinea will probably need to deepen its financial markets, its equity markets to allow companies to raise capitals, its debt markets, perhaps even considering a sovereign bond issuance so that global investors can tap into the opportunities of PNG as well.
Is this sovereign bond, I mean, a lot of us in the business community are finding we're in a little bit of a hollow, and you know, not a depressing hollow. We know it's a bit of a dip we have to go through till the next project comes. But so is that sovereign bond a short-term fix for that?
Not necessarily. I mean, I think it's a sovereign bond has many attractive features. One, to develop a corporate debt market, you do need to have a liquid government debt market to begin with, and I think a sovereign bond would become a useful benchmark for that to be priced off if that was transparently the case. The duration of the bond also becomes important, and I think, you know, this dip is occurring at a point when perhaps global liquidity is at its most generous. The US Fed, the Bank of Japan, the European Central Bank all have very low interest rates, have been pumping liquidity into the global economy. Perhaps it's the opportunity to actually issue a bond at a level at which interest rates are quite low. 5 years from now, 10 years from now, interest rates are definitely going to be higher for bonds.
Does PNG qualify? I mean, I've heard there's a trigger point in any economy whether you can actually do this. I mean, does PNG qualify?
I think so. Given the scale of the projects and given the potential and the opportunities that come from these, I think it does make sense to have markets in this way. And we have to remember that essentially what a bond is borrowing from future earnings to meet current outlays and expenditures. And if the outlook for those future earnings is so positive, then it makes sense.
And it is positive, although you make me a little bit nervous when you talk about borrowing from future earnings when we're still about to get over a hump with a sovereign wealth fund, etc. There's a lot of conjecture in the. But will it also, would a bond ease up? I mean, obviously the government's been borrowing very heavily in the domestic market.
Yes.
And I mean, some people would feel that's freezing out domestic investors. Would the sovereign bond alleviate that?
To a certain extent it would. I mean, I think it would stop some of the crowding out in the domestic markets. And, you know, I suppose some of the critics say that, you know, a problem with sovereign bond issuance is there isn't the same discipline on spending. But international capital markets do provide their own discipline to an extent. And I think, you know, a sovereign bond issuance would be a way of testing, I suppose, how Papua New Guinea is viewed by the international capital markets. And the level of risk-adjusted return they'd be willing to accept to invest in that.
Could you comment on that? Were you willing to comment on, I mean, how the capital markets do see Papua New Guinea?
I think what we are seeing is there is still a lot of money flowing into real money managers and hedge funds who are viewing the emerging markets. And given the demographic profile in the Europe, US, Japan, that is only going to increase as people start to retire. So what we're seeing is there is a blurring between a traditional emerging market and a frontier market. This year I've been asked more questions about economies like Sri Lanka, about Pakistan, about Papua New Guinea.
Well, what are we? Emerging or frontier?
Definitely frontier, but I think get on the cusp of moving into emerging.
Okay. Last year, ANZ actually moved to trade renminbi here.
Yes.
Which they, I mean, what sort of signal was that? Is that a very positive thing?
I think it is, and I mean, ultimately, you know, as China comes to dominate more and more of global trade, as energy flows, perhaps which may be financed from Chinese borrowing, are directed to the Chinese economy, it makes sense for those to be denominated in renminbi rather than them to be denominated in US dollars. It reduces transaction costs for businesses, having to hedge from US dollars to Kina to renminbi. It's a more simpler transaction. Though it's more about simplifying transactions for business and recognizing the renminbi will one day be one of the world's major trading currencies.
But is it also the bank recognizing that there are people here who want to trade directly in renminbi?
Yes, yes.
Glenn, thank you very much for that, and thank you for your involvement with PNG Advantage 2014, and obviously for ANZ's involvement as a major the gold sponsor of that event. We hope to see you back next year. I sense that the bank is still very bullish about Papua New Guinea, and we'd love to see you back next year to tell us if you're still bullish about it, which I'm sure you will be. Thank you very much.
Thank you. We'll definitely be back.
Thank you. That was Glenn Maguire, the Chief Economist Asia Pacific with ANZ Bank, based with Global Markets in Melbourne, speaking about his presentation to PNG Advantage 2014 Infrastructure and Investment Summit in Port Moresby. That's it from Business PNG.
The fourth Papua New Guinea Advantage Investment and Infrastructure Summit was held earlier this month in Port Moresby. The annual event, dedicated entirely to the promotion of business and investment in Papua New Guinea, saw PNG's business elite gathered at the event. Over 2 days, delegates heard about Port Moresby becoming the Dubai of the Pacific, tax incentives in the 2015 budget, and how to develop relationships with Chinese businesses. With the PNG LNG project now underway, PNG has now joined the small family of gas-producing nations. Day one's investment summit was partly focused on what comes next, while Day 2 saw the theme Infrastructure Summit, dedicated to the role the private sector could play in its development. The term public-private partnership was the topic du jour, as the Prime Minister stated at the conference that the time has come to reform the relationship between government and business, and the role of the government in business. We spoke to Publishing Director of Business Advantage International, Andrew Wilkins, as he shared the key outcomes of the summit as well as his plans for future summits. Tonight we have with us on the show Mr. Andrew Wilkins, the Publishing Director of Business Advantage International. Mr. Wilkins, welcome to the show.
Thank you, Leanne.
How are you?
Very well, very well indeed.
What are your views on the recent PNG Advantage conference?
It's been a tremendous success, I have to say. This is an event that we've been now running for 4 years, and every year we've got bigger and bigger. We've been able to attract better speakers and more delegates, and this year has been the best yet. And I think one of the features of it that really encourages me is not only are we getting the support of local government and local business, but also we've had a record number of international delegates coming to the event this year. So it's turning into what we always hoped it would be, which is an international investment summit.
Can you give us a few statistics on how many international delegates are here?
Yeah, well, I think we have around 300 delegates to the event, and of those, well over 50 have actually come from overseas. So we're probably looking at about 60 or 70, including some of our partners. So that's a really good result, because it's not easy to travel to PNG.
Sure, yeah.
People have to come here, and make the effort to come here. And we've had people come not just from Australia, which of course is quite close, but from Singapore, Indonesia, Malaysia, Hong Kong, New Zealand, so from all over the region, which is great.
Yeah. So why investment in infrastructure?
Well, infrastructure is a particular focus this year, and there are probably 2 or 3 things driving that. We've just finished the most magnificent project, the PNG LNG project. Now that's out of the way, people are asking what is next. And they're looking around the country and they're seeing a whole lot of things that need to be fixed up, roads, ports, airstrips, and so on, that need to be fixed up before the next stage of PNG's development can occur. And the PNG government has already acknowledged this, and you'll have noticed in the last 2 national budgets, the amount of money that is being spent on this infrastructure, the building blocks for the economy, if you like, has more than doubled.
Yeah.
So we have a government that recognises this is a priority. It's put money, which is important, behind this infrastructure. At the same time, you've got major partners such as the Asian Development Bank loaning or putting finance into, I think, over $1.1 billion into PNG's infrastructure next year.
Yeah.
And you've got the Department of Roads Works, which is also investing majorly in roads. So this is the moment for PNG to seize the opportunity to fix up this infrastructure. If you could fix the roads up in the highlands, crops will be able to come down the highlands to port and to market. If you can fix the ports, it'll make all of business more efficient. So everyone serves to benefit if we can get the infrastructure right.
Yeah. So we can say that the conference was a success. What are the key outcomes?
That has got to be measured in the future.
Sure.
What we aim to do with the summit is to bring people together in one room. Once you bring them together, people with common interest, we're discovering amazing conversations are taking place. The Asian Development Bank is in the room, the World Bank is in the room, the IFC is in the room, government is in the room, but also a lot of private businesses. GE, for example, the big international global company, it's just opened its first office in Papua New Guinea after servicing the PNG market for 60 years. Now it's actually got an office on the ground here, and they're just one example of what's happening. So it's about starting conversations. Once the summit finishes, those conversations continue.
Okay. So what do you have in store for next year's conference?
It's a very good question. As we all know, next year is a very important year for Papua New Guinea. It's the 40th anniversary of independence. And so we want to make sure that PNG really shows the world that it's open for business. So while we've had 4 years of running this summit, we did it first of all in Brisbane and the last 3 years in Port Moresby, I think the challenge will be to take PNG out into the world next year.
Okay.
So once we finish the busy tidy up of the conference, which we will be doing now, the next thing is to plan how we can take PNG out into the world.
Okay. And do you have any ideas as to where?
I think you've already interviewed David Thomas, the expert on Brazil, Russia, India and China. I think those, India and China particularly, will be very interesting. Indonesia as well, as we've already heard, it's the fastest urbanizing country in the world right now. It's just next door, it's our neighbor.
Yeah.
So I think there are some obvious places, also Hong Kong, Singapore and Philippines as well, our nearest neighbours. And we must also not forget Australia, which is still the #1 investor in PNG.
Okay. Thank you, Mr. Wilkins, for your time.
You're very welcome.
Once again, that was Mr. Andrew Wilkins, Publishing Director of Business Advantage International. And that's the end of our show. For more information, be sure to visit MTV online. That's mtv.com.pg/business. Or to join the conversation, follow us on Twitter at Business PNG using the hashtag Business PNG. Until next week, have a pleasant evening. I'm Leanne Jarari, and this is Business PNG.